Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And roll top wire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Somebody has been in. My baby was in here, I think, because my things are all kind of a little screwed up. Okay, there we go. Good morning, everybody. My audio was screwed up because I didn't turn on my audio thing. Hey, let's just go straight to the chart. All right. So this morning, they're all saying on the news squawks and everything, S&P 500 is down because of Snap earnings. Who gives a crap about Snapchat? That's why the NASDAQ is down 1%? Whatever. Okay, that is just so silly to me. Treasuries, on the other hand, well, we had a little bit of a move. I'm a little disappointed about this because obviously I was the wrong way. I was looking for another move up. I lost a little bit. It was just one loss, but missed a pretty good down move off of comments from ECB. But here you can see like they're racing it out and didn't really matter much in the end. But we're very much getting a tight market, so we got to be careful here, right? Oil's still kind of drilling around in its range. Natural gas jumping pretty big yesterday and coming up to close to new highs. Gold and silver recovering, maybe about to pick up the moving averages again. Not that it matters. I mean, how many times have we reached moving average and we're like, this is it, and then oops. Gold and silver, copper taking a little bit of a down move here this morning. There have been some economic numbers from Europe and China and so forth. Then we come over to Bitcoin. So now the interesting thing, yesterday S&P 500 was up, but Bitcoin was not. Bitcoin was down $1,000. And then we got the dollar. The dollar is weakening. This has been proving to be a headwind for a lot of commodities. Like we'll come over to corn, for instance. Corn having some up and down moves here off of what the dollar is doing. So and then when we come over, move back over to here, let's make sure that our news squawk is on. I don't have anything for the 6:30 news. Okay, we're all okay there. A little behind though, aren't I? You know what happened was I couldn't get my stupid light to turn on. It turns on now. I don't know what the deal was. I make sure that it's at 20%. Couldn't figure it out. I was like, what the F? Anyways, the news. So we do have flash manufacturing and services PMI at 9:45 Eastern time, and then at 10 we have new home sales. So we've got quite a bit of what is likely to be meandering trade for the morning here. All right, what do we got going on in Discord? No, you misunderstood. Fundamentals are a very important driver of future orders. No, future orders. There's an exorbitant growing money supply in 2021. So in the order flow, you could see institutions and retail traders placed their orders more along the long side, which was expected now with the Fed tightening. Expectations are well reflected in more than any other available. Additionally, fundamentals are powerful to make market cycles visible. One example here is the relationship of interest rates and inflation, which is no. What he's saying is that's Do you understand calendars rollover? Which column are we supposed to look at? First last trade, first last holding, position notice. I know it's not delivery, and I'm guessing it's notice. So for the treasuries, it's the third business day. So you don't want to be trading the 10-year after Thursday. Right? I don't remember all the specifics now. Now you're gonna make me go back and look at the contract specs. Markets. Let's just do ZNCME. 10-year note overview. They're pushing down here this morning. I don't know if that's like it's an interesting spot, but specs. Daily settlement, the designated lead month. If the lead month contract trades, if no trades, blah, blah, blah. Now, what is all this nonsense? It's like first call or something like that, right? I don't know. All I know is that you're gonna want to start thinking about rolling over, and that things will be rolled over by Thursday. But in the meantime, we can still look at June. And certainly if we're trading the micros over here, doesn't really matter because we just go to the end of the month anyways. I don't think I want settlement visit, do I? Delivery procedure. No, that's not it. Last delivery date, last business day of the delivery month. They keep changing this so that it's like confusing. Don't they? Product code, settlement, first holding, last holding, first position, last boarding, first notice, last notice. No, first holding is 25. 1, 2, no, it's 3 days. 27, 3 business days. So it should be the 26th or something. I don't know. My product always tells me anyways. About this report, what does this say? Last trade date, settlement date, the date on which the final settlement price, first holding, the date when CME clearing will begin accepting position dates where applicable for deliverable contracts. Last holding date, the date when the CME will no longer require position dates where applicable. First position date, the first date on which the CME clearing will accept intents and run assignments for deliverable contracts. Okay, so that is the one that is like really bad, right? 27th. There you go. Oh, it's the third. Okay, yeah, that's the third day. I was right. I was saying the 26th, blah, 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 but no, I'm right. The 27th is first position. So again, I'm going to read their thing. First position date, the first date on which CME clearing will accept intents and run assignments for deliverable contracts. So if you are in a position from the 27th onward in the June contract, you could be assigned. Ergo, you cannot trade from the 27th as a retail trader, right? So by the 26th is basically when you're going to roll over. There you go. That's the answer. I was right from the beginning. I knew I was. You know what? Sometimes I just don't trust myself enough. But I was also a little fuzzy on details there too. So it's always good to review, right? Yeah. What was I doing before we got into the? Oh yes, we were reading that. Oh yes, I was typing in Discord. Okay. Oceanic, hey, thanks for stopping in. Dude, I did something weird to my back yesterday. Like I was doing my workout and then after my workout, I'm feeling it like right in here. That seems to have gone away and now I feel it here in my chest. Let's see here. If you understand the rates markets, the short sterling curve smile is going to disappear and fast given the UK's Prime Minister this morning. The Bank of England is in a bind. The economy is contracting a lot faster than they anticipated, and the market still expects 115 basis points of hike this year. It ain't happening. Massive opportunity to capture as the Bank of England will likely pivot dovish at their June meeting. June will likely be. I'm not convinced that that's the case, guys. So with this is the same argument as the Federal Reserve isn't going to be able to finish the cycle. They're going to have to cut it short. I think it's like the tissue around the bone in this instance, but this was definitely the muscle. So just doing that, I felt a couple of things readjust. So I don't think that all of the soft tissue in there is quite sitting the way that it wants to. The greatest risk to a continued financial expansion is inflation. You can already see now with all of these companies, especially Walmart and Target being the best example of how the inflation has really hammered the margins of many of these companies. So the central banks have to get inflation under control. So they are not going to cut their cycles short if that means that there's going to be continued inflation, right? So the issue that you got here is, okay, so the economy is contracting as anticipated. If you is that creating deflation, right? Is the deceleration of the economy enough to bring prices down? And from what we're seeing so far, I think suggests that maybe not. I think that it suggests that we're going to continue to have supply disruptions and that we're going to have to hold the economy back until that's all passed, right? So the Federal Reserve in particular is probably going to get to at least neutral as fast as possible. And then if there is a problem, maybe they leave it there for a bit. Or maybe they do another mid-cycle adjustment, they bring it back a quarter point or something like that, right? I think that just going all in on like that they're going to let up is a long-term bet that I don't want to make. And I'm continue. I don't know why it seems like in the media and the talking heads that that's always the play that they want to talk about. Is like, is the Fed gonna follow through on what they say or not? Is kind of I've never seen that to be a trade that works. Even if you're right, it's never been a trade that I've seen to be like wildly successful. Mm-hmm. So, oh, I know what I'm thinking now. My mind is all over the place. I don't think that my Adderall is kicked in here, man. Let me just double check here. So the Treasury market, the 5-year has kind of been sitting at the range. It looks a little more dramatic in the 10-year than the others, but let's just line things up there. The S&P 500 is kind of doing a head and shoulders pattern and maybe a head test at the moment. So we'll see where they run out, but it's not too much moving in the S&P 500 overall. So probably can ignore that for another 15 minutes. I'm not seeing much movement in the 6J or golds. Yeah, markets overall are pretty quiet. The most active thing I see at the moment is copper, which is down 1.5%, followed by corn, which is also down. So I think that we're seeing the effects of the weaker dollar maybe here today. Although at the moment the dollar is on the upturn. There's a little uptick there in the treasuries. Okay, so I've been thinking about a desk. I've been thinking about making a new desk, and I've been thinking I want one that's like this desk, but taller and with a tray. And a tray. And then I could move these armrests down and I wouldn't look so uptight all the time. Like that. There we go. Yes. Yes, like this. So that would be where the keyboard, and then the desk would have to be a little bit higher than that. I think that's cool. But then if I make a tray, how wide does it have to be? Well, it's going to have to be 32 inches wide, probably. 3 feet. Have to be 3 feet. Hopefully the piece of wood that I got allows me to pull off a 3-foot chunk. We'll see. We shall see. And then how deep does it have to be? 1.5, probably. Yeah, sure. 16 inches. $16 by $32. I'll write that down. Make sure you, I do things after. What I do after the workout is usually more foam rolling. There's this guy. So there's this guy on TikTok, I think it is. Yeah, he's on TikTok, and he's a chiropractor. But he's not a chiropractor. He realized that chiropractic is all nonsense. So I like him because of that. But he's kind of turned that into, okay, I'm going to be a skeptic about everything, and everything that everybody says about things is wrong. And so it's very often like, okay, like the one that really drives me nuts is he says foam rolling doesn't really do anything. He's wrong. So he points to a study where they did it, and they actually did find a difference. They found a difference that seemed to be statistically significant, but it was very much on the edge. And so he basically says, like, it doesn't do anything. But the conclusion of the researchers was it actually appears to provide a benefit that could matter on the margin if you are an elite athlete. I also do find, though, that it really helps you with your mobility overall, right? He doesn't believe that, and I think the whole thing is kind of silly. So it's like, yeah, I do the foam rolling and all that sort of stuff. I think part of it was that last week for my Wednesday workout, I think I did I did sprints instead of lifting. So my back is not quite all, was not quite all prepared for it. Okay, let's see here. I think that it's like 80 inches long, but let's see here. $79. That's a weird 79. X 79. Okay. Oh, and I just measured the height there, and I don't remember what I put. I'm gonna say 25 inches high. So I think what I'm gonna do with this desk Love professional. Well, I do, when I get my back cracked, I usually feel better. But I think that it mostly has to do with getting you moving. So there's this whole thing with chiropractic where they say there's a subluxation, right? What is a subluxation? And I don't think that they actually, like a real a scientific a chiropractor with like a real scientific approach will probably say, well, we don't really know. But people think that it must be like your spine is out of alignment. It doesn't work that way. Your bones go in the way that they go in, right? But what I think that people don't understand and that I'm not hearing in the medical community is that there is a lot of soft tissue around these and soft tissue in between them. And sometimes that stuff can kind of get out of whack or just not lubricated well and everything. And so when the chiropractor comes in and pops your back, it can kind of get the fluids and everything back where they're supposed to be. And I think that that's part of why you can have these situations where it's like they crack the right spot and all of a sudden you instantly feel better, right? It's not that the bone was out of alignment. It's like a nerve was being pinched or something by the soft tissue. Okay, so I think we're going to make a desk. Like, here's going to be the desk. And then I'm going to have the feet like this. That's going to be like a trapezoid so that it's very, very stable. And then, well, maybe it shouldn't. No, I think a trapezoid would probably be fine because we have metal here and everything. This will be metal, so this trapezoid would be very, very rigid. Otherwise, you'd probably want to put like triangles in it like that, right? But I don't think we can do that. Let me draw it better though. And like that. Okay, so it'll be like that. And then I'm going to have a tray like this. That's going to be my tray for the keyboard and everything. So then I can have my audio stuff like front and center in front of me and my notes. So that'll be really, really helpful, I think. Or I can have like notepad and stuff like that. And on the back here, so one of my problems is that I've got like all of these lights and stuff that come off of the back of this, right? So there's going to be like that. But then I think that I'm going to build like a cable raceway that's like this. It's like that. The cables that go through. And hopefully, and maybe I'll even make it a little bit like that. And hopefully that is enough to prevent the baby from being able to touch the cables. And I think that that's all I really need. And that'll make it easy, keep it easy, and I can still attach everything to the desk the same way. And I will mount things directly to the desk if I can, but I think I need to find like, how am I going to do this? Um, maybe if I get speaker stands that don't mount to the desk but sit on top of the desk, so I can kind of push them back, and then I can get multiple monitor stands to be able to move the monitors out. Yes, I think this is gonna work. I think this is gonna work, guys. Yes, so I think that this is what I want to do. It's gonna be tough. I have this piece of wood. It's like 2 inches thick, so we'll see what happens. I'm talking about next level Cairo, where they choose this method because surgery would be certain death or paralysis. Well, like the thing is that the studies continue to show that chiropractic does provide relief and can help with musculoskeletal issues. It's just that chiropractors think that there's all these other things. Here are the signs and symptoms of monkeypox. I read, have you guys been following this monkeypox thing at all? I mean, I haven't been that interested by it. I kind of like I read it and I'm like, this people are only reading this because they're scared, but it doesn't seem like that this is actually like a thing that's really that significant. But apparently they're saying that the reason it got spread around Europe so much was because of people were having sex at raves, is I think what they said. There was like an LGBT festival, and then there was another festival. They didn't say what the other festival was, but there was another festival that was basically like a rave. And I'm like, well, yeah, you guys, if you're gonna go to a rave, just keep in mind, okay, you pick up nasty bugs from raves, okay. Like the rave plague is a real thing. Ugh. Okay, so we're coming up to the top of the hour. The Treasury is kind of balancing back out. I'm still kind of sitting here like, I think I would rather lean to the long side in the Treasury, but I don't think that I have a very clear direction. I'm kind of starting to wonder if it's better for me to just try and trade sim for the next few months, because this has been happening a lot. We've gone through this period where it feels like every day we have something driving us, and I felt like I had a clearer idea of which way it's going to go. Now I don't. I think I have to pull a little bit out of the range. It seems like it's really hard to do that in the micros. And so maybe it's better that I just sim trade ZN here in those situations. Because I'm little concerned that the market, that's the ultimate definition of noise. I'm concerned that we're gonna run into this we're gonna smash right into this summer market where, like, it's been super crazy and everybody's concerned in spring, and then the summer comes along and is just kind of dull. Like, it doesn't recover very strongly. Maybe it's like a slight uptrend through the summer, but like it's mostly just kind of dull, except for like the big news releases. Because it's already turning into, I mean, it tends to start doing that in the later part of May, and it's really felt like that yesterday, right? And what we're seeing so far here today kind of suggests the same thing. Like, there hasn't been that much trade. It's moved down and then back up to, started at 30, down back up to 28. And a lot of the trades going back and forth there were only like a few hundred. So through this whole move, we basically changed from 100K to 105K. It's like 5K lots in 30 minutes is not a lot. Mhm. I was tweeting Gary Norton was saying that like people trying to compare this market to past markets, and I was like, I don't think anything is comparable. Like the whole rise up was not in line with reality. I feel that a lot of this down move is not in line with reality either. It continues. I have to laugh when I read the news because it's like it, the move has been really bad. I mean, this has been a really nasty market, right? There's no active economic crisis going on or anything, right? Like I was reading Bloomberg this morning and they're like, here's what we're looking at, but like we still don't see evidence for a recession necessarily. Like the market is down big, but the actual evidence for a recession is we're not to those kinds of levels yet. So like they're still saying, nah, this is like no big deal. They're kind of interesting. Do you think Xeon? What do you mean by a precursor? So the thing that you're going to find is that the UB or ZF will lead depending on which way the spreads are going. So you see right here, the 5-year moved way further than the 30-year did, right? 30-year is basically where it was. The 30-year moved up 2 ticks. The 5-year moved up 6, right? It's because of the spread. The spread is steepening at the moment. Quite significantly, by the way, I might add. So it's more likely in these situations that ZF is going to be the one that's pushing and ZB is going to lag. Well, you could try playing UB by looking at the ZN DOM. I haven't tried that in a while. That's what I was trying to do when I started out, and I basically gave up on that. So like the thing is that well, I don't know. I mean, my understanding of it is all very, very different. I think the biggest thing in ZB is that, it's a larger tick size and it tends to move more overall because it's like a change in rates kind of has a effect like a whip because the 30-year is all of those. So if the Federal Reserve raises the funds rate, right? Funds rate would be like short-term bill, right? So if you add up all of the short-term funds, federal funds rate loans that you could make over 30 years, and that's, the change that it's going to make in the 30-year. So the longer the duration of it is, the more it's going to move the price of it, essentially. Even though there's this whole spread thing, right? So the ZB is a lot more risk, is the big thing, right? Like you're risking at a minimum $100 a trade. Okay. Maybe you have an account that's large enough to handle that and be fine, but I did not. I tried messing around with it. It didn't work very well. It's just too easy to lose $500 on something like that. Just like that. A little slip move and then, a little slippage. 2 bad trades or something like that. Yeah, you can lose it very, very quickly. But more so than that, just remember that the more liquidity there is in an instrument, the more likely you are to find consistent patterns and flows. So when I talk about patterns and flows, like everybody thinks that it's like when we price fails to reach a higher high, we get a lower high. That has some probability of creating a turn. Nah, like this kind of short term stuff is just not reliable, and especially not in the treasuries. Treasuries are like the most efficient instrument out there. But what you will find in ZN is like last day, first day of the month, pretty statistically significant behaviors happen. Tends to buy on the last and first day of the month. It's very consistent, and there's so many people out there that trade the 10-year that there's more patterns like that to go and discover. They're kind of, but they're not really patterns so much as they are seasonalities to some extent, right? They're like seasonalities. But you could also go in and see it like when X thing happens, when this economic news is good, or there's global tailwinds or whatever, like the funds will come in and do relatively consistent things. And those trades seem to be a lot more reliable in the 10-year, in my experience, because there's more liquidity. Those guys come in and they do it in the 10-year. They don't do it in the 30-year. Different funds have different preferences on which part of the curve they like to trade, essentially. And like a really big risk adverse fund just goes to the instrument that has the most size so that they affect it the least, right? So that's kind of why you do ZN. And then the reading the order flow in ZN is definitely better than ZB. I've always found that ZB tends to react better to technical signals, and ZN reacts better to order flow signals, but I've never found one on those that was like good enough that I really wanted to trade it that way. Seems ZN moves one way and then UB follows. I'm not so sure about that. So if we were to line them all up here, let's just look and see if we can falsify that just from watching it here. Okay, they're all lined up right now, right? Which one ticks up first? Oh, they're close. They're close. It doesn't look like they're going to go for it. The 10-year could go. Okay, so the 10-year went and then the 30-year went. Okay, 5-year ticked back down, flickered a little bit. Okay, but that time the 10-year did go first. Okay. Could you have clicked it? Okay, that time the 30-year went first. Right? The 30-year ticked up too. The 10-year hasn't ticked up again to 120, which is actually kind of weird because you'd think that it would be easy for them to get back to the 120 there. Whatever, right? And the amount of time that it was there was like, pretty quick, right? Oh, you think we should wait for a reversal? Well, but there's always going to be they're always going to be in line almost tick for tick. So here's what I would do if I was going to play that game. Or when I'm playing that game, here's what I do. Is I'm looking to see what the spread is. And then if one of those instruments is out of line with the spread, then I take a trade off of it. Hey Gus, how are you doing? Just passing by? Yeah, that's fine. I need to make more videos for you guys. I didn't make a video this week and I feel really bad about it. I was close to finishing up my gamma video, but I didn't completely get it. Okay, so in this situation, right, to see the ZB down 2, ZN down 1, ZF down 1 is a little off kilter, right? ZF would typically not be down at all. Okay. But it was a downtick. So is that in line with the trend? I think in this case I'd want to go long. So I think that if I wanted to go long, I could put an order here in the 5-year. There's 8,000 has traded at 07.5. So let's see if they clear. Okay, nope. That was bad. As soon as I say that, something happens. Good grief. You actually might have been able to get out on that one, but that was a little bizarre, actually. But I guess that's kind of one point, is that this trade is kind of hard to pull off. Like there's a reason that I don't do it, right? But I can still kind of use it in some instances. Okay, but that looks like there was just a big change in the spreads right there, right? And that's where you're going to get screwed is when the spread changes, right? Or like news comes in or something like that. When you say it, let's test a reversal. The issue with the reversal is that, like, how are you sure that there's going to be a reversal? Like, So what Toby is saying in here is wrong to for example, if a fund is expecting surging commodity prices because of a fundamental background, then they will just rebalance in favor of the energy sector. Yes, but the majority of the moves that these funds are making have absolutely no connection to the fundamentals. They are, for all intents and purposes, random. Well, that was really interesting. That trade would have worked out probably out of sheer dumb luck if you had a wide enough stop in the CF. But it did not end up being a very good example for the thing that we were trying to show. What was it? Right? I suppose that when ZF took the hit, you could have said, no, this is still going to be intact, bought it, and you would have made money on it reverting back, and you would have gotten more ticks out of it, right? So I hope that was enough, but I guess maybe it was a good example because it kind of shows you how it works, but it also kind of shows you the dangers of doing it as a retail trader. So now in this instance, the 10-year is kind of leading the other two by quite a bit, right? Probably because the 10-year does want to get back to 120 even. But that movement makes me feel much more confident about possibly taking the treasuries long. Although I do think we're still kind of in this situation where the S&P 500 is going to be the thing that moves everything. Like we probably get that thing where it moves just before the S&P 500 goes or as the S&P 500 opens. Those moves can be a little bit harder to predict. Wow. Your obs. So my observation is that this assumption is valid during reversals, support, and resistance. So that just realize that right off the bat ish, you're kind of leading yourself into a trap, right? Because we do not have the capability as humans to really see what the tendency is of this thing over a large data set, right? Like over 10,000, trades, how does that actually behave? There's no way for you to know. And what you're seeing right now may just be today, it may just be random, right? Also, when you're talking about support and resistance, um, you're also kind of treading on dangerous ground because the whole theory behind support and resistance is basically bullshit. So the idea is that there is going to be a place where sellers come in and there's going to be a place where buyers come in, and that keeps it within support and resistance, right? The reality is that the way that these large institutions trade is they trade in blocks, and they basically have to trade into the liquidity. So they're kind of looking for these locations where there will be more liquidity, and they want to trade into them, and then preferentially get price stuck in there, where they can slip even more orders into it, right? And so that's where a lot of trends come from. That's why there's a high degree of autocorrelation of order sign in the markets. So when you're seeing support and resistance like this sort of a thing, what that usually means is that nothing's actually happening and that they're just trading the correlations, right? There's some correlation or what do we call it? Co-integration relationship with another instrument that kind of keeps them limited. So when you try and take a trade off of that, you kind of have to realize that you're basically trading in an area where you're not really able to predict the future flows. You're kind of betting on like nothing happening. And that means that when it breaks out, you can lose more. This is why support resistance traders have a high kurtosis and tend to blow accounts quickly. Here's Yahoo Finance. Social media stocks trend down in the pre-market this morning as Snap shares plummet after CEO Ryan Spiegel says the company will miss estimate. Who cares about Snap? Really? I don't get it. Like you say, ZN turned somewhere and UB is still waiting. Well, I mean, it can go multiple ways though, ish. That's all. It's been a long time since I've tried to backtest on one instrument based on another instrument. There's kind of a couple of technical challenges around that, but I did do those sorts of things. But every time that I try and backtest any kind of setup like this, what I eventually come to find is that when you do it over a large enough data set, and I mean like you have to do like 5 years, but once you do it over a large enough data set, you tend to find that the market is remarkably statistically efficient, and that any kind of pattern that you think you see like that is temporary. And you go back 2 years ago, it didn't do the same thing. The whole thing about the spread is still kind of a good example of why that might not work, because you may see a situation where ZN turns down first. Like the reason that you think you're seeing that is because lately the 5-year has been leading, right? But you go back 2018, for instance, it was the opposite. That 30-year was the one that went first almost always. You would see the 30-year turn down, and then you could maybe take the 10-year and try and trade that. Changes. Mm-mm. Even for a swing trade, you might not. But I don't guess support and resistance, but observing when ZN turns somewhere and UB is waiting, then trade starts. Well, like if you, like the whole, let's try and set up a situation right here, right? Right now, you can say resistance is here and support is, let's say 30. And support is here, right? So your whole idea is going to be like, it's going to come up here, right? I'm going to see the 10-year move down first. So then I'm going to go and I'm going to sell the 30-year, right? And here's what's going to happen in that situation. The 5-year is leading. The 30-year is not going to move as much. So even if you're right, you're only going to get like 2 ticks out of it. And if you're wrong, this could get whipsawed out, right? like if you're right, the amount that you make on it, 1 or 2 ticks. If you're wrong or the spread changes, like let's say that flattening comes in, if we move up but we also flatten, the 30-year goes stronger, you're going to lose more on that trade because the 30-year goes more against you, right? Or if you're taking it the other side down in here, I mean, pays the bill till it doesn't, right? Like there's a situation where it goes down. Like how can I represent? Let's just say 1. Like if it moves down to here, right? You're going to make if you took it in the 10-year, you're going to make 1. If you take it in the 30-year, you're going to make like 0.5, right? Now, if you lose in the 30-year and the spread is still kind of lagging, the 5-year moves up more, then you lose negative 0.5, right? But if the spread changes, then you lose negative 1, right? Now, if you come down here and it does the positive one, which is like things come down, but it steepens, which would be a little bit more weird, but it's possible, right? When you get that situation, it's more likely that you're in a trend. So you would have cut it off early, right? ZN is screaming long. I wouldn't say that it's screaming long, but I do kind of feel like I want to take it long. Yeah. My trigger finger is itching. I'm kind of sitting here like, why don't you just give me 015 right there? It's kind of how I feel like I want it. They're doing funky stuff though. I don't think that I don't trust it. It's whispering. Because remember, we had this whole thing, it was up here. It was like, oh yeah, so probably now we move in down in this range and then we have to push up. And then the 5-year just got absolutely smashed. I mean, they recovered, but the 5-year just got absolutely smashed. What the heck was that with? That was weird, right? It's like as soon as I said it to, as soon as I said, well, maybe you buy it here, and then they went, okay, let's go down 3 ticks. What? Yeah, treasuries can do that sort of thing to you, though. Oh wow, it actually filled that. Okay. Well, we shall see. It's not immediately ticking through me 5 ticks, so I guess I'm okay with it. I guess with what you're talking about though, like I have an even bigger reason to kind of be a little iffy here about it, because really what I want to do is I want to predict orders, right? Like I want to have a reason to think that we're going to continue to see some buying here in the 10-year, right? We've moved up. We got a pretty good, okay, on the open, they sold. It came back up here. They extended up to the high. They're now back to here. Okay. So that's good. We did get some buying. The order flow has been buying. What is it that we think is going to make it so that the 10-year continues to see buying from here on out? Right? What do we have? Well, we have the S&P 500 opening up, which may be a sell based on the overnight action and the sentiment. That may be a sell. So that could help push us up with the risk sentiment. That could be one thing, right? We also have news at 9:45 that are the PMIs, which could also be bad. They could also be good, but they could also be bad. I think that I'm more like, well, let's see, what is the number? They are looking for a forecast of 57.6 versus a previous of 59.2 for manufacturing and 55.1 versus 55.6 for services. Well, I think that the services is probably going to get hit compared to last month. So that might be a place for you to work it, right? Okay. And then at the top of the hour, we've got new home sales and the Richmond Manufacturing Index. So the Richmond Manufacturing Index, they're looking for a reading of 9 versus a previous reading of 14, but the New York Manufacturing Index was negative. So that might also be worse than expected, right? Okay. And then it is getting into the later part of the month where you tend to see a little bit more buying. And it's a Tuesday, so I don't know if that one really does much for you, but right. So those are kind of the flows that we have to work with, right? So I think that gives us something that we can lean long, but it's not super clear to me, right? It's not super clear, but it's enough that if I'm getting a good position, I could try and hold it long, right? And that's where I take it. So for me, what matters, everything after that, what matters is what can I do to get myself a better price, right? So I know if like nothing is going on and it's just the spread that is moving it right now, then I, at the very least, I want to get long on the side of where, the optimal price is for me, right? Just realizing that that doesn't necessarily predict that it's going to move out, up or down, right? So what does it come down to? I would exhort you to become an informed trader and to take your trades based on information that isn't necessarily reflected in the current market price, because the market is not informationally efficient, right? And I would further exhort you to put off all forms of technical analysis, which is to say, the idea that past price movements will predict future price movements on an intraday basis, because they don't. It's mostly random. And in any instance in which there is like a consistent behavior, there is a skew in the risk reward to make up for it. Almost always. Doesn't mean that they don't exist, but they're very hard to find. You're going to be using like real serious quantitative finance sort of stuff, right? So technical analysis in general doesn't work very well. So I would just, anytime that you hear somebody say like, here's the setup, like there's a reversal, the 10-year moves down X ticks to confirm that there's a reversal, the 30-year is lagging, take it there. That sounds like a terrible trade setup to me. Sounds like a terrible trade setup to me. Because what makes you think that it's really reversing? Right? You have a piece of information that tells you that the trend is going to reverse. I mean, the tendency is that there's a high autocorrelation in orders, and if there's a large meta order being executed that is a buy. By the way, another thing I should note is that there's just been somebody has been coming in and buying during the first part of the session, like every day for the last week. So I think that there's probably a very, very large sovereign wealth fund buying up a little bit of treasuries. But it's certainly been a situation where like they'll take their leg up, and then a seller will come in and take advantage of that to smash it down to the other side. That's been happening a lot. Okay, S&P 500 falling into the open here. We got about 20 seconds. We'll see where they go. Okay, here's the open. There's a large bid at 39.2625 just showed up. I'm looking like the treasuries are kind of playing off of the ES though, doesn't it? Okay, so I'm noticing there has been a price spike up in ES, but the volume is all sell. Not significantly so, but maybe about 1,000 contracts net short so far. It does look like they're having a little bit of a battle here. If the sellers do prevail here at this location 39.30, there's going to be that large bid at 39.26 to contend with. If they get through that, then we might see some interesting stuff. Well, the Treasury's deciding to push up regardless. Where are we at, relatively speaking? Because I remember going through this spot many times. Yes, it was last Friday. They ended up going all the way to 120.085 when they broke above 120 even. Okay, so the S&P 500 flipped up to the highs there very quickly. There was a quite a strong impulse of buy volume on that. Now, the cumulative delta is not reaching its highs yet, though. But that was a very interesting flip, wasn't it? The treasuries did push back down when that happened, but they kind of overall are still maintaining their hawkish tilt, or sorry, their dovish tilt in the treasury, right? Hmm. Hmm. And the 5-year is still leading here, right? Although the 30-year kind of has to catch up a little bit to help us out on this trade. That push to the upside is starting to look like the worst thing that could have happened to them, huh? Okay, so here comes the big order. They gonna trade through it? The shine away, shine. Okay, a little bit hit into it. A little bit. It's not pulling or anything. They're gonna have to trade into it. It seems like that they have plenty of volume to do it, though. Seems like they should have plenty of volume to do it. And their treasury is taking off here. 493, but they still didn't trade through it. Gonna need to reset things. Do I see anything above us? I don't see any major targets above us in the treasury, which is a little Okay, so now they've pushed through the big order. There's a big order at 39.20. And I have to say though that they made it through that order quite easily, didn't they? You caught it, Alex. Good job. Well, D came in. He saw it too. Like, well, I think we were all on the same page. Oh, you think you'll hold it all day? I hope you can. I hope so. You know what, man? Anytime that I really, it's so funny. It's just like if I try and hold it, it completely reverses, and if I just try and take the quick profit, that's the one that just keeps going and never stops. It's just. I think the reality is that the hardest thing to predict is how far something's going to go. Predicting how far an instrument will actually go is the hardest thing in trading. Like we got a good run here. Is it going to go all the way? I mean, because they could very easily come back to 120. I'd have to say with the force with which they started to push up there was very reminiscent of some of these big pushes up that we've seen in the last week that really ended up being quite excessive. Like there was many of these times where I was like, well, I would like to be long, but I would like a pullback. And they never gave a pullback, and they would just go up like 16, 20 ticks and never stop. This one has been 11 ticks. 11 ticks, and they've kind of pulled back like 1 or 2 ticks along the way. It's been a little bit more of a bubble up. Okay, S&P 500 now starting to attack some of these lower orders. Something I should note, there are a couple of orders that are showing up below the market, like 39.20, etc. But that's only like 200 lots. So those orders are like what would be an average sized order in regular liquidity conditions, right? So I guess the point is that it would not take much for the market to cut through those orders, but we are seeing them start to materialize down below us in a I would deem a support zone below the previous swing low of 39.22, which we've already pierced. Okay, well that's looking pretty good in the 10-year. We're starting to get some more serious volume coming into it now as well. And so we started this move at about 100,000 cumulative delta. Now we're at 117. So about 17,000 long. That's pretty decent. Although some of these moves were more like 30 to 50,000 ones. So I think that 20,000 would be a good spot. I am seeing a little bit of absorption there in ES at 39.20. Let's see if the sellers push through. I have to say so we're now about 3,000 contracts net short on ES since the open. So that's not very. If you're a bull, that's not very encouraging over there in ES, right? Oh, I need to learn to use these conversations in active chat. Look at that. That's looking quite nice indeed. Yeah. I think that the S&P 500 could push to new overnight lows, but they are going to have to push through to do it. Yeah. Jeez Louise, how much higher, right? Like, well, I don't know. I haven't seen any of these prices here in the treasuries be like really excessive yet, but they are starting to trade more volume, aren't they? There does appear to be some degree of chasing going on here. But let's just remember that the last time this happened, and it was like at the exact same location as well, they made it all the way up to 08, was it? Yes, they made it all the way up to 08, and 08 was kind of the resistance point. So we kind of got to keep that point in mind, because if they go through the 08, and I mean, if the S&P 500 really craters and gets below 3,900, I think that's a very possible scenario. Then this thing could really run then, right? But otherwise, we'd have to start thinking about taking profits at 08, if not before that. Well, we did get a decent pullback there in the 10-year, didn't we? Yeah, I said resistance. So what is resistance to me, right? Resistance to me is an area of higher liquidity, right? And I know that it exists, but I don't ever want to come in and say, I want to trade against that spot or whatever. It just means that it will take more orders to go through. But like, think about the situation right now, right? If the S&P 500 goes below 3,900, that's probably where people will start to take options and start to really push it, right? They're going to buy the treasury. There's going to be more than enough volume to push through whatever kind of liquidity they have up there, right? So I guess I would file that one under I would file that one under, price is not very effective at predicting future price, right? But I'm not necessarily trying to use price. Okay. So treasury just kind of shifting around quite a bit here. But kind of looking like they might be splitting the difference at 04. The ES did appear, it looks like that the buyers that were buying there are holding it for now. Okay, interesting. there does appear to be an area of lower liquidity here at 04 and 04 half. But for some reason, when it's ticking, there's a lot happening. Okay, so large order just showed up at 04. Might explain it. Oh, and they ate it. Whoa, whew. And the 5-year jumping up there. Kind of suggests them buyers are still there. They're like, sure, I'll take that one. Anybody else at 04 half? Come on, you know you want to sell it. Come on. No? Okay, we'll tick back down to 04. We'll let you have it. We can let you offer it out at 04 again. Now, if they tick back down at 03 half again, then I'm going to be a little bit, that might be correlation. So I do see the 6J, like they had their move up and they're kind of trying to balance out somewhere. So it's not entirely clear where it is, but if this is like a multi-leg wave, it's probably going to be like balance out here at 04 for another 30 minutes and then another push up beyond the 08. Unless, of course, the S&P 500 just decides to crater here again. I don't know. I mean, it looks like that the buyers have held it for now. I am actually seeing a little bit of a pushback in the cumulative delta. But it seems like they're right on the edge, right? I don't think it would take very much to push them over. Something I've noticed about this market in ES is that it doesn't just kind of like slowly turn over. It's like it's doing its thing and then all of a sudden they're like, okay, it's time to go and sell it. And it just turns right down. Yeah, okay, yeah, good point. PMI flash. I have, for some reason I haven't heard, oh, you know what's going on here? My news squawk is going and I'm just not hearing it because I don't have voice meter on. Yeah, so we're seeing the liquidity pull here. I think that maybe some of this buying in the ES was people trying to take off positions. Okay, so the manufacturing PMI wasn't too bad, 57.5. Services was about what I said, 53.5 versus an expected 55.2. So it was right. There was a little bit more pressure on the services. Okay, so we are getting a little bit of buying in the treasury. Not quite as much as I was expecting, but it looks like maybe they're turning through. The micros are not behaving right here. That's a little odd to me. There you go. Okay. I think that they weren't getting market orders in the 10-year for some reason. You just saw a cascade of them come through. Okay, now remember, we got other news at the top of the hour, right? Which is the Richmond Fed Composite Index and new home sales change. Curiously enough, though, the S&P 500 isn't cratering. This is NFP volatility. You will regret it. It goes back to 10K per level. I know. Well, but it wasn't like I don't know. Don't you think it was a little weird? Like, okay, it was a news. It was mildly bad. The 10-year moved up like 4 ticks. The micros didn't move. Eventually it did fall through. Of course, eventually it did fall through. But it was, given how light the liquidity was, I thought it was going to be like, boo. Why the marker gap down for not reason? You mean why is the S&P 500 gapping down? They're not getting tired here? Wow. Yeah, well. Something that I had to learn the hard way is that there can always be more volume, man. You think, man, there's been so many contracts have gone long here, like Surely there's not. There's always more. There's always more. There can always be more. When you're developing a strong trend like this, there can always be more. I want to take advantage of this as much as possible so that when ZN goes back to 10K per level, I can be moving 250 lots. Hell yeah, that's the attitude. Logos. I mean, there's a lot of risk to this low liquidity environment, but that also means that there's some real reward if you can trade it effectively, right? And some of my best trading has been in like low liquidity environments. So okay, so we are starting to see there was a fairly large iceberg at 08. Now, often when we see a trade like that, it will extend even further and then come back to it. That can happen. Where it's like the buyers, they buy the rest of their buy and then it settles back and then they start putting the orders in. Hero trade on what? Are you going to take it short, Octavius? I don't want to trade against you though. No. Let's see. I need to come back over here to Twitter. Anybody seeing anything interesting? Okay. I don't know about that one. I'm not going to read it. Snap. Is that, well, Bitfinex says down 37% and he says, oh, snap. But I don't know what he's talking about. Seems to me that Bitfinex thinks something big is going on in the crypto sphere today, though. Okay. Well, this sets us up in an interesting situation in the treasury because we are now. Oh, okay. So what was it? Thursday was 10. We got to 10 last Thursday. That's kind of the high water mark is 10. So we're only a skip away. But I'm thinking, for me, I kind of got to be on my toes. Yeah. So I'll throw something out there just in case we get lucky. But I do see the liquidity hole starting to kind of form here in this area, and I am a little bit iffy about it doing anything before the Richmond Fed Manufacturing Index. That's kind of the wild card. Is do we want to leave this on the bet that the Richmond Fed is going to be bad too? You think there's, well, I don't think, my understanding is that USDT never got back to parity. Could be wrong about that, but Bitfinex seems to think, we'll look into it a little bit more after the top of the hour, okay? Because I think that if something's happening there, we've got some time. Oh boy. So I mean, should note that the dollars is taking a pretty big hit here. 6J is going, dollars taking hit. Gold and silver are on the up move. Copper is actually kind of recovering too. So I think that copper's up here because of the dollar, right? I don't know. So what I'm seeing right now in the treasury is that it's able to move quite freely within this range at the moment. They got up to the top. I was like, "Oh boy," but they didn't well, they touched the high, but they didn't push further. S&P on US flash PMI's cost pressures have risen to a new survey high, which alongside the encouraging output and employment numbers will fuel further speculation about the need for further imminent aggressive rate hikes. Oh, interesting. So while we've been getting a risk off move, we're getting some suggestions from analysts saying that this kind of makes us think that the uh, central banks will have to continue raising rates. Okay, so I'm getting some weird behavior here in the macros. They don't want to hit me. You have to hit me. Okay, feels good. I'm just thinking here. Wasn't necessarily liking the prices that they were giving me. I'm probably going to regret taking that off, but 40 to 50 is about where I'm like, okay. And I'm not sure that I really want to hold it to that news. Someone has a birthday coming up? Who? Not me. My birthday is next Tuesday. I thought you were, when you said that, I thought you were talking about me, but then I'm like, oh no, wait, that's not. My birthday's next Tuesday. Live Action remembered my birthday? Thank you so much. John always remembered my birthday. Oh man. Why did you now just reminded me of that? Miss the guy. Oh, look, see, there it is. They're like, okay, Seth, we're gonna go without you. We're gonna push new highs. It's gonna be a new weekly high, new monthly high, isn't it? Yep. 31st. My birthday is on the 31st. 19.5 would be like the next leg up after 10. And that would be the highest that we've been since April 27th. So basically in a month. But that's kind of why I'm taking it off here. If it's balancing here just below that and we've got some news, I don't know, man. I don't know why that makes me nervous. I should be like just sticking with it, right? I don't know. What do you think? Do you think I'm foolish to have taken it off? $40 is, I don't know. I think part of it is that I've had a couple of tough trades lately. So to get that one that takes me positive is quite nice. I suppose the other side of it is that I did feel like I was kind of getting away with something there with where I took it off. Because it was what, 2.775? So look, it's already back $5, right? And I've kind of been getting away with the limit orders. So I'm kind of sitting here thinking, well, if I really want to take it again, why not go short 278? Seth, you're being greedy. Let's let this next piece of news come through because, you know, we don't know what it's going to be. 9. Expectation is 9. New home sales expectation 751. And then new home sales change month over month. We're looking for a reading of negative 1.7%. I'm just kind of thinking to myself now, I just made $40. That felt good. It was nice. You know what? Yesterday, I was all excited to work out, and I did. And I was like so spent afterwards. And I didn't even work out very hard. And then I had time. So like I got on my computer and did stuff. I didn't write. I studied. That was good. I'm happy that I studied. Because I need to get on that. But no writing. I need to finish writing. Well, I can do that tonight. Oh, so what did I do for my workout? I kept it simple. Yeah, I think I just ended up doing like 4 or 5 sets of snatch doubles at a minimum load because I'm not really. Here's the thing. When I hit my nervous system really hard, it can kind of affect the trading. So I'm like I've been kind of hesitant to really hammer my nervous system unless I'm like preparing for competition, you know? Yeah, doing Olympic weightlifting. But like the thing is that I don't know. Maybe it's just because the pandemic. Basically, I don't go to my gym anymore, and because of that, I haven't been quite as aggressive with my workouts. And then having the baby and all of that, and so I've been way more lax about it. Okay, here they go, and they're saying, Seth, you shouldn't have done it. I'm not seeing a pull here going into this news, though. Okay, so Richmond Fed Composite Index was -9 versus a 10 expected. So maybe we should have held that, huh? This is starting to look like it's gonna go. Whoa. Okay, so that's a pretty big order showing up at 120.16. That's probably been there the whole time, though. I mean, that's a pretty typically big number, right? I don't know. This is some good volume coming through, but not necessarily pushing through quite yet. But now that we've broken like a monthly high, clean and jerk is my favorite lift. I don't have the flexibility for. Oh, really? That's interesting. Yeah, I'm a lot better at a clean than I am a snatch. My snatch is not nearly what it should be compared to because I can clean like 110 kilos, but I can only snatch 70. Be careful of training heavy. If a couple of friends can hardly whack these days due to disc damage going heavy, well, they were probably doing something different because the risk of harming yourself doing Olympic weightlifting is extremely low. Like people continue to do this into their 80s and 90s. Yeah, lots of resting orders here mid-fight. Well, the liquidity still seems like it's there, right? You think that's strong? Because to me, it's like embarrassing that it's only that. I should be able to lift way more than that. But really I shouldn't. I'm really not built for weightlifting. I'm really not. Okay, so I kind of want that 2.755. not because I don't think that it's going to stop, but because that would put me at $50. But they're not giving it to me at the moment, are they? Hmm. Here you go. Come on. Come on. You want to short this? And then I wouldn't fight it, but it's turning into exactly like these other moves, right? Where it's like it keeps going and it seems really a little crazy, doesn't it? Your injuries came from maxing out overall train with reps of 10, not 1. Oh no, we do max lifts. I we know what we're doing. Let me put it that way. So I have the coach that I go with, and we've been doing this for years and years and years, is coach many national level weightlifters. And we have a weightlifter that is a possible Olympic contender, in fact. In fact, we've had more than one member on the Olympic team. Not like to the Olympics, but like they have like these are our selections for, when they start training as though they're on the Olympic team or whatever, right? We've had those. Yeah, we know what we're doing. And we have a very, very well set up. I got out there just because I wanted the $10, but look at that. Should have waited. I don't think I want to deal with that 16 though. You think that they're going to blow through that? If they blow through the 16, because they are starting to get a little heated here. Excuse me. If they blow through the 16, that could be something else. Well, looks like they're going to shy away from it for now. Back to where I got out. Yeah, it's a specialized gym. Yeah, and you got to realize that an Olympic lift is really different from other forms of weightlifting because you're only under load for a few split seconds, right? So we do get injuries because they're serious, and the program can push you to your limits. And we've had some situations where people were at a high level and they overworked themselves. It's kind of hard because you kind of have to ride that edge if you really want to be like the best, right? But generally overall, we've had very, very few injuries, and the injuries that we have had that were like serious were not injuries that happened while they were weightlifting, and were more to do with their own problems. Like we had one weightlifter, she was a Masters world champ, like 5 years in a row, or I mean, she's been doing it forever, and she had to get like a back surgery, but it had nothing to do with the weightlifting. It was just she had back problems to begin with. Because it's kind of like, what's my excuse? Because I have a pretty bad back too, but I think that my problem is probably more that sometimes it's just hard for me to get my body to put everything into it. I'm in Utah. We're in Utah. Your order flow was lagging the DOM. I think you will get some situations here when the market's moving this fast where your data feed seems like it can't keep up, right? Or your computer can't keep up. I think in my case, it's usually more my computer, but oh my gosh, there's, I don't know if I want to tell this story right now. Remind me another day, because I had a story about the an argument over performance and everything during fast action that was like really irked me. I was like, okay. Well, I was just being nonchalant about it. was just like, well, here's what the technical details are about it. And they got really upset. I was like, okay, well, good. I maybe you're crazy, because I'm not saying anything controversial here. Okay, they took out the order at 16, but they didn't just fly through it. They filled them. They're not just flying through it, not yet. Yep, and back down. So it might be one of those ones where it kind of has to diffuse through. We could push above 16, but it doesn't look like it's like a stop run yet. Yeah, see, they're hitting into 16.5. I'm not seeing very many stop orders hitting. They're just hitting into it because that's where the liquidity is. Well, we got a lot of orders at 18. Maybe we could see that now too. Okay, now the S&P 500 is turning in apocalyptic again. You got at least 2 tickets. Oh, right. You got something out of it. I got you. I'm still sitting here like, should I still be in? How much did I leave on the table? Because I keep killing myself when I really got one and I cut it short. I think that the first one, we're taking it off, wasn't a terrible decision. And then I did just get back in and it was fine. Now that last one, I kind of have to wonder about. Well, we're still sitting at the prices that I got out at. So I'm for now I'm okay. If they bust through 18 and they trend even above 18, then I'm going to be like, okay. But let's just note that as a spot that there is liquidity up here, right? Let's just know we broke those highs. It was 10. It was way back at 10. Can you believe that? 10 was okay, the monthly high. Okay, so now that we're through 10, we got up to 16 and 18. There was a lot more liquidity up here, right? So that could slow us down for sure. How much are we on cumulative delta on the day? We are now at 138K. So almost 40K long. And we're running into 3 and 5K icebergs, right? Yeah, I think that for me, that to get an even $50 on the day is probably just right. Probably was the right thing. And the center of the profile that they're forming here is at 15, 120.15. So one friend at 21 years old came in second to John Cook's 845-pound deadlift after a back injury. He couldn't walk out of the gym the week prior. He liked beer for the carbs he claimed was his secret. Yes, muscle. Well, it is. It's. I'm not going to say it's crazy. It's about 40-point decline so far. So that is still quite constrained compared to some other days, but they may just be getting started. It seems like that the market really didn't like all of that news that came through. By the way, can I take a victory lap here? I 100% called all of the numbers today. I said services is probably going to be a little bit lower than the estimate. Richmond Fed is probably going to be negative. I pointed both of those ones out. I don't know why I wasn't willing to bet on the Richmond Fed and hold my trade, but it was fine. I think, well, I mean, I know why. It was risky, but that should have been a risk that I should have been willing to take. But I think that I was wary about it just because, it's been a tough week or two. This has been a tough two or 3 weeks, and I caught a good winner. I want to hold on to it. Powerlifting is crazy. Yeah, it does. YouTube Finance does a dab, which is kind of like bowing, I think. bow before my awesome predictive prowess. And calling, yeah, because it did like once they got through that, it just boosh. Where was I? I think now it's hard for me to tell. I mean, I took 765, right? I took 65 to 55. Before the news, we were at 07, which I think is about where I got out. So yeah, so I took 775, 65. Oh, so I actually only left $10 on the table there. That's not too bad. Now I might have left even more on the table by getting out of that last one. Look, there's $5 there. You do a great Terminator impression. Why would you say that? I don't. Okay. Just hearing some stuff. UK energy minister. Don't know if that's a big deal. Yeah, they can trade through 18. It's gonna be interesting. Like, is there anything above 18? No, there's not. There is still some stuff up there at the top of the 5-year, and the 5-year is down considerably. So are we getting okay? So through this whole move, we steepened, and now I'm getting signs that that steepener is kind of reverting a little bit. I did one on a video. I don't remember that. No, that trade in the micro was live, yeah. I've kind of come to the, like, if I'm gonna take a sim order, why not take it in the 10-year up here, right? They're gonna do the level break? Come on. Come on. There you go. There you go. Thank you. Thank you very much. I gotta tell you, what's Utah? I love Utah. It's really dry right now, though, man. Like, I'm getting scared. Like, water wars are coming, man. I'm telling you, I'm concerned. It's going to be like Utah and Colorado versus California. There's going to be a war, man, a water war. All this nonsense about Donald Trump and wokeness, and that's not what causes the American Civil War. It's going to be water. Waterworld. We should watch that tonight. I think just because you pointed that out, I'm gonna go, because it was on, was it Netflix? I don't remember which service had it. I don't care what the review. I thought it was a great movie. I thought it was a really interesting movie. You know what though is kind of sad is that sometimes a movie will fall short and not do well, merely because the movie doesn't match people's expectations. But then the movie is actually a good movie in and of itself, and those are the movies that attract cult followings. The Fifth Element was another one of those, right? Like, they were expecting the Fifth Element to be like a very serious, highbrow sci-fi, and it was a really good sci-fi flick, but there was a lot of weird crap in it, you know. So when it came out, a lot of the reviewers were like, okay, whatever, and then cult classic. Which one? Oh, he's giving me a link here. Copy link address. Oh, I hate it when it does this. It wants me to go to studio.youtube.com instead of that. No, that's supposed to be my Bronx accent. That was terrible. I have conclusive person. Bart Simpson. Yes, that was a good video. Dude, that one did not get the attention it deserved, man. That was a good video. That was a good TikTok. Do you think AMP is cheaper than NinjaTrader when scalping? Who would you go with? I really appreciate your help. Okay, so this is a difficult one, Ian, because it changes all the time. I'm going to guess if we went and we looked at it right now that AMP would probably still be cheaper, right? So it's kind of it's a difficult thing. Like picking a broker and your data provider and everything in futures is way too effing complicated right now because it's like NinjaTrader only works with certain brokers now and AMP is cheaper, but then it's like which data feed you gonna choose. But you could also go with if you're not going to go with NinjaTrader brokerage, you're just going to go with the brokerage that allows you to use like whatever platform you want. Then you could do AMP, you could do Optimus, you could do Iron Beam, you could do Edge Clear. Like there's just too many choices. Phillips Capital, like, but I believe that. Well, it's most likely that AMP is still the most popular and the cheapest. Took me 2 months to go through the brokers and platforms and choose one. What a pain in the butt. Yeah. You know what I think is going to happen, though? Here's what I think is going to happen. I think that, well, we've already seen that the brokers are starting to, like, acquire platforms and like work more closely with platforms, right? Like Edge Clear got that Edge Clear X platform, which is basically Motive Wave, I think. I forget. You called short around the open? Oh, you mean an ES? I don't know if I don't really feel like I called that one. I don't really feel like I called short on ES. I was up there and I was like, it doesn't look good, but and if they get below 3,900 for sure, but that's not a risk that I can take with my teeny tiny account. So this is not one that I took, but I mean, we kind of had the right idea. Like for me, the thing that matters to me more is not so much that we predicted a really strong trend in the treasuries or maybe that we predicted a strong down day in ES, but that we understood what the possible future flows were well. And I think that today we did that. We knew that there was going to be some economic numbers that were probably going to be bad and can move the market. And we kind of knew like the sentiment and everything else like that to be able to say, yeah, if ES fails 3,900, it might not be very good. So, well, thank goodness I don't listen well. Yeah, but I might have predicted if I was trading ES and I was focused on ES, then maybe I would have said, yeah, let's go short. And I probably would have held that one more than I held the treasury one. But, it's okay. I was focused on my treasury trade. You tried Tradeovate and something felt off about the platform? Yeah, there's a lot of people that use Tradeovate and I never understood what they liked about it. Never got it. Was always kind of like, this platform's kind of weird. Anyways, what you're going to see is more brokers attaching themselves to platforms, more heavily. So like right now you got like Edge Clear, Edge Clear has the Motive Wave platform and stuff, right? But I think that you might start to see them even start to fund more their own platform to get platforms that are really truly unique to them and do things that are seemingly unique to them. Then the next thing that you're going to see, though, I think, is you're going to see all of these platforms start creating cloud platforms. So I'm going to bet you, not that I have any direct knowledge or anything like that, but I'm going to bet you that like the next move for NinjaTrader is going to be the NinjaTrader iPhone app, something like that. Like, I think that they're all going to kind of move into this direction. Because micro futures really broadens the audience that can trade futures, right? And so now the only real barrier holding people back is the investment in the software, right? Like, people don't want to spend $500 for Jigsaw, right? But more, and that's why these platforms are starting to pay for their platforms so that they can give you the platform for free, right? They can give you the platform for free. So then if they put it on the phone, now you really have something that's really accessible, right? Now any idiot can go and download the phone. Well, not any idiot, but you get what I mean. You're probably pretty smart if you're doing futures, but there's a lot of people that they don't want to scalp. Like, what we do is very short-term trading. You need a beefy computer and all, you're really concerned about the performance of it when the market gets really hot and all of this sort of a thing, right? But most people, they maybe just want to be able to hold a swing. Like, it would be really advantageous for you to have been able to go, oh yeah, I just want to be long, or sorry, I just want to be short one micro 10-year contract to hedge my equity portfolio, or however many contracts it takes to hedge your portfolio, right? And if you know that, like, there's a problem and that, like, it's a risk off environment, like, that's a useful tool. And it's something that, like, before people would kind of be hesitant to do, but now if you have micro futures and you have a phone app, like, hell yeah, right? So it's kind of exciting because the audience for this channel is going to grow a lot, right? We're still always probably going to be on the more, we teach some pretty advanced stuff on this channel that I think some people, it either goes over their head or they just don't. I don't know what the deal is, but sometimes people just don't seem to understand. Have you heard of the FairX Futures Exchange? Yes. Although I haven't traded on it. Chatting here and forgot to stop, just lost AM. No, what? Did it take you short the ZB? Because that's no good. It does look like that steepener is kind of reverting a little bit, and that led to the ZB pushing a new high there. Don't let me distract you too much. Come on. Anyways, my impression of the FairX exchange was that it hasn't been doing too well. That the CME came in and did micro futures and basically undercut them. And the only thing that the FairX exchange has that really seems attractive to me is dollar index futures. I think that dollar index futures would be if the CME could somehow work out to buy the dollar back, buy the dollar index back from ICE and do micro dollar index futures, that would be a pretty big deal, right? But yeah, I think that seems to be where the industry is going. It's becoming more accessible, and there's probably going to be more phone apps. Now, what I would like to see is and I haven't seen this yet, but I would like to see a broker where there's a free phone platform that works on my phone, but then when I'm trading on during the day, I can still use my Jigsaw or my Ninja Trader or my quant platform or whatever the deal is, right? That's where now the other side of that is that for us that kind of understand the quant stuff and are willing to program and stuff, that's like just means a bigger advantage for us, doesn't it? Because we can you're going to have less competition on that site. Well, there's going to be more liquidity out there in general to possibly take advantage of, and like noise. And there's going to be okay, I'm losing the plot here. for those of us that are interested in quant things, I think that is going to be more of an advantage, because what you're going to see is the industry is going the other way. The industry is going towards like being more generalized. So the overall quantitative finance knowledge of the futures trading space, like what is the level of the overall space, is probably going to decline, because you're going to have more casual traders in the market, right? So for those of you guys that do understand that stuff, it's going to be a big advantage. So it's kind of, I think that the way that the industry seems to be headed seems to be positive for us overall, right? I'm happy about it. Of course, it doesn't solve all the problems. It's still going to be super hard, but well, this kind of looks like it wants to just keep going. There's $20 right there. So I left $30 roughly on the table today. I don't feel comfortable taking a long here now that the S&P 500 seems to have found at least a slight reprieve around 3880. And also because I think that some of this extension is because of the spread reverting and not because they're actually overall pushing up, right? I think that I can sit down and say $50 is kind of the really good day target. Let's just be happy with it. No, so the I pulled up the tab with the stock market Steve video on there. So like stock market Steve was funny because it was like it was a crazy market, right? Now that we're in a down market, I don't really feel like it's very funny. In fact, I often find it hard to have anything to say about it. It's just like, yeah, market sucks. And then yesterday it was like, well, they kind of gave us a reprieve, but I'm not too interested in it yet. Yeah, but I did think that it was funny. I thought it was funny. I enjoyed doing it, but I kind of wonder if the accent was wrong. I think that I should have just tried to copy the Wolf of Wall Street, right? I should have gone for a Queen's accent, right? I don't feel like I have it in me at the moment to try and pull off a Queen's accent. Kind of the hard thing with the New York accent is the New Yorkers can tell, man. They're very discerning on their accents. They can tell where you're from. They can tell that you're faking it. You know what I'm saying? How can I put buttons on the graph itself to the right of the price? I don't think you can draw on it to the right of the axis. That looks like it wants to keep going. Looks like it wants to keep going. So we said, hey, there's a lot more liquidity up here in the 16 to 18 area, but now they're through that. So is there really any limit to how high this can go in the treasury? Not really. Not really. How much net contracts are we now? Oh, we're actually still only at 140. That's interesting to me. So even though we continue to move up in price, we haven't really moved in cumulative delta much. Is there anything else above us now? Where do we if we come back to a daily chart? Okay, the next like high point I see is 121.090. That's way out there. Oh man, if we were to see 121 today, that would be a little crazy. I don't know. So here's the thing. Okay, so we've been having a bear market, yes. Monday, it was the first up day we've had in a long time. Some people are wondering if we're going to have the 8th down week in a row, which is like unprecedented, right? So we come into today and we see some kind of opportunities, some economic numbers. Now, these economic numbers that we're talking about are typically like second tier economic events, right? But they were kind of the numbers that we were kind of watching, like, okay, do the services and manufacturing PMIs come back, right? I would add, by the way, that one of the concerns in the services PMIs is that cost pressures still seem to be quite high despite the decline in activity. So that doesn't help us with the whole Federal Reserve easing sort of problem, right? Although market does seem to be suggesting that they're not, the treasuries have become a risk off safety haven once again. So that's good. Anyways, so when we put all of that together, does the news that we got today justify a complete collapse in the S&P 500 and a trend day in the Treasury? It could, but I don't think I can confidently sit here and tell you this is going to be a trend day, just hold it all day. Don't think I can confidently say that. That's why I was kind of taking some sequential profits. Probably shouldn't have taken my trade off at 4.5 or whatever it was. Oh, it was 5.5. Yeah, that's right. $20 off of that. $20 left on the table, and then there's $10 I left on the table from getting out, but still made 50, so it's still fine. The amount of the range that I took was still quite impressive. But so the whole question is like, okay, well, if it's going to be a trend day, we could still get in at 735 and still make money, right? No, don't like it. Don't like it. I think that we might come back and revisit 17.5 as a possibility. We may form a liquidity hole up in here. It kind of seems like it's slowing down. It kind of seems like the S&P 500 is starting to temper itself a little bit. We got 30 minutes left in this stream, so we can continue to watch it, but order flow behaving. Yeah, in the ES. So I have a really hard time reading the order flow in the ES, but it does look like that the worst of the selling has subsided for now. Okay, so now we need to go back to what could predict future orders. Well, so there could still be some volume left over from that, from everything that we just talked about, although that's quite uncertain to us. We know it's a possibility, but we don't have something that tells us that it's a high probability. Okay. We got the European close in an hour, so that's probably going to affect some trade. And then after that, when is it? After that? Yes, about an hour after that, we got the Chairman Powell will speak. And who knows what he's going to say. His speech is going to be delivering pre-recorded opening remarks at the National Center for American Indian Enterprise Development Reservation Economic Summit in Las Vegas. That is like way too long of a that is way too long of a thing. But I'm not so sure that speech is actually going to be that significant. It could affect order flow going into it, but I'm skeptical that he's going to say something in there that really affects the market, right? So from my perspective, does it make sense for me to try and get in again? No. If I was in a trade, I think if I had really kept it through all of that, here's where I think if I had the solidarity or whatever you want to call it to have held that trade through all of that and made $80, I probably need to be taking off now. Is what I'm thinking. No, it sounds like so Powell will be speaking, but it will be pre-recorded remarks. So I'm not sure he's even going to be there. And again, it's about Indian enterprise development. So I'm not so sure that he's gonna, that's an opportunity for him to make big comments about the economy and stuff, right? Instead it's going to be more about like what we do to help aid the development in economic development in the Indian community, that sort of thing, right? Which is very good. I'm very glad that they do those sorts of, I have to say the Federal Reserve does a lot of good work, and they're involved in a lot of good things. What was I going to say here? Oh yeah, I'm noticing that the bid in the 10-year, it looks pretty firm, right? So you're getting 2000s on there. There's a 2300 at 120.20. So although I'm kind of getting a few signs that suggests to me that the treasuries might balance out. Like I think that if there are further legs up, they're going to be much more constrained. So, but the liquidity really suggests that a lot of people are involved in this market. So even though I don't think that today is a trend day, we have to say that it's on the table. The conditions are there that you could get a trend day. You really could. Let's come back to TweetDeck. I was kind of stumbling over my words there with the Powell speech thing because like in my mind, what I'm thinking is people are going to say, "Oh, he must not care about Indians. Otherwise, why does he only send a recorded message? Why isn't he there?" I don't know if that's what you were kind of hinting at, but when is the roll? Thursday. You don't want to be in it on Friday. So, you know what else is something? Can I say? I am so happy that the treasury market has become a flight to safety asset once again. Because it used to be that like a market would, when the market flips down, when ES flips down, like it's just so nasty. It's so hard to hold on a trade when the S&P 500 is being vengeful, And yet it's so easy to just hold a treasury contract, it seems, And so, you know, I was kind of hoping for some of that action and it was like turning down and it was like I wasn't really that involved in the treasuries. Now we're starting to get those trades and I've caught a couple of big strong trades. It's been like I'll catch a $50 winner and then I'll have like $5-10 losers or something. That's been happening a lot. What's the likeliness? I think the word is likelihood of them retracing this entire move. I would say the likelihood of them retracing this entire move is probably pretty low. But let's just come back to this chart here. Remember that on a higher time frame, there is a real tendency for the treasuries to like mean revert. So note here, 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 here. Okay. Like it goes in waves. And then over here we had this. And when it goes, it kind of tends to do this like so there is a good, really strong possibility here that tomorrow it will come back a bit, right? like that it could come all the way back to here. Well, actually, let's just, for the sake of argument, say that they extended a little bit up. So maybe with tomorrow's candle, let's draw it. We're going to draw it. I'm going to try and like, so tomorrow might be a positive up day, and then you might get this sort of a thing, this sort of a thing, and then it could do this, right? If we're in like a longer term trend, right? Like the economy's really falling out and Federal Reserve's going to have to back up. We're in a recession, yada, yada, yada. Like that's the sort of thing that could happen, right? So today is most likely going to be a double distribution. Like I'm going to bet that what am I willing to bet? I don't know. But I'm going to bet that we get a upper distribution that settles somewhere above 120.16. If not, right here at 17.5 looks like a pretty solid place for it to happen, right? Yeah, probably a double distribution day. Yeah, if ES blows out, then it could really run. But that's where I come back to, you know, should the S&P 500 blow out? I don't think it should. Like, look, markets are not informationally efficient. Okay, so let's just remember, could do whatever it wants. But does the information that we have right now suggest that the S&P 500 should be lower? I don't think it does. I think that it was, yeah, we should have a little bit of a down move. Okay, now we're okay. From here, it's kind of hard for me to predict what will happen, because what you're more likely to see is like, this is where you know, maybe now you start to play the range here, right? Unless Mr. Powell decides to really say something and is like, no, we're gonna, I really think we should do 75 basis point hike now. Like just what I've seen in the past week, you know I said that it was just, but now I feel really strongly 75 basis point hike. Okay, then it could retrace, right? But don't think he's gonna say that. Snap Incorporated shares on track for the biggest one-day percentage drop, last down 40.3%. Carl Quintilla. Some say Snap is company specific, but that won't be the market's base case, says Bank of America's desk. It's the, quote, first of many signs. Walmart, Target, Amazon, too many data points. Hiring freezes, layoffs are a massive trend in tech. They are. Big tech are laying people off. So there's this lady on TikTok, really, really smart lady, and she is like a hiring manager. So she has a lot of good advice for like getting jobs and working with your boss and managing all that sort of stuff. She said that every single one of her clients are planning layoffs and restructurings right now. So, and she said that the people that are getting laid off the most are the expensive people, the people that are being paid way more. You know, the ones that they really negotiated hard and negotiated a high salary sort of a thing are the ones that they're letting go. And they're saying, oh, well, why don't we let somebody that is more junior come in and give them the opportunity to grow up into a better position, is what they're saying. So it's kind of a little, kind of sucks for a lot of those people in tech. I've seen a lot of people, man, especially on TikTok. There's some people on TikTok, man. They're like, oh yeah, just go and get a tech job. You don't actually have to do any work. Just be a lazy piece of crap all the time and save all of your money, and then you can retire early, sort of a thing. Oh, I hate those people. Like, you're not actually good at this. You were an a-hole. And they think that they're rich because of they're so smart. And the reality is they got lucky. They got lucky and they were in a market bubble, right? And they just happened to get out before it collapsed. At what percentage drop can we start speaking about a market crash? For example, if the Nasdaq fell 31% from its peak in November. Okay, so we call it a bear market when we're down 20%, which it was at 39.50, right? Let's come back over here and let's pull up our lovely S&P 500 chart. I added a new indicator. Can I show you? It is, well, so here's volume. By the way, you notice that volume is kind of useless because the volume is daily volume is very correlated to how far it moved in the S&P 500. Okay, but here's the range in points. So today we've done 76 points of range. Some of these days have been up in the 200s, right? Some of these days are crazy. They're not the craziest ever, but some of these days are crazy. This one in particular, this drop right here was nutso. That is like one of the fastest drops I think we've ever seen. But then we look at it on a percentage basis. Okay. So like an average move is like a 1% move. You can kind of see it there. And all of a sudden lately, we've been getting like 3-4% moves. Like what? It's crazy. It's crazy. Is that a crash? Oh, sorry, I'm wrong. It was 38.50. 38.50 is where we're in a quote unquote bear market. That's a 20% decline. So you see, I have like a fib thing on there that's just like from 0 to the high so that we can see how big of a decline it is. 20%. Like when this started, it was like, okay, well, 10% decline is one thing, 20% decline is another. Once you get below 20%, now you're talking about like 2008 crisis type of stuff, right? Now for me, where I would start to say it's a crash is like the liquidity pulls and the price is just in free fall. Would be nice to have a tech job like that. I never had one. Yes, I never had a tech job where I could just be a lazy POS, but you know, I pace myself. I pace myself at work because if you just go in and do everything you possibly can, like, and just work out, you burn out. You really do, and you don't work as effectively. So pace yourself. But some of these people are like, oh, everybody else sucks, so you don't actually have to work that hard and everything. And I'm just sitting there like, no, you just got away because it was a crazy bull market and nobody cared. It's not going to be like that forever. It is kind of the treasury is still kind of pushing up here, right? Like that. So something that I see in this market that I think is really interesting is that the S&P 500 would be down, 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 and then it's kind of up and it's just kind of going sideways, and then all of a sudden, you know, in a normal bear market, it might be, oh, like we kind of fall and it just kind of tumbles. But this one is like, nope, it's time to sell. Boop. Okay, now we're done. So it really suggests to me systemic selling by large funds and so forth is kind of what seems to be happening here. And the Treasury is reacting to ES and did come back up and push highs again. In fact, I think that the 10-year did make a new high. Although now they got a big order there at 21, and given the context, I'm a little suspicious about that one. That kind of looks like somebody's like, okay, yeah, that was a good move up. I can say, look, he canceled it as soon as it went bid. Yeah. Yeah, we didn't fall for it, mister. Listen, Mr. Market Maker, I fully respect Mr. Block Order Trader, whoever you are. I do respect what you do, but I'm going to call you out on your bullshit when you're trying to pull it. Now, that order was bullshit. You know it. I know it. Everybody knows it. Anyways, I haven't seen like a flash crash in ES, right? Could happen. Oh, Frank can't find a chart of the Treasury futures on TradingView. TradingView. If you need a view, call TradingView. Wouldn't be surprised to see intraday reversal later in ESNQ. Possible, yeah. Like, the thing that we got to keep in mind is that the liquidity is so light and the market dynamics are so off that you really can just see some really excessive volatility. Like, I think that I was too cautious in the treasury here. Of course, me being cautious and it going further doesn't mean that I made a bad choice, right? Maybe in that one instance, but in other instances, maybe it would go back. The thing that I'm concerned about is that you do have a situation where it could just flip back in your face really quickly, right? Because it moved up so fast, it doesn't take very much for it to get smacked back down. Of course, I think that we would probably need a piece of fundamental news to make that happen. Like a Fed speaker or something like that. But it is a possibility. And when we start to get into the market bottoms, what you will often see is one day are they going to go and push the high again, huh? Maybe. S&P 500 futures, the daily charts. Close this because we don't need this. Okay, 2016 is a pretty good example, but I think that these ones, okay, so this one is a really great example, right? Is there was a bottom very early on, and then they kind of chilled out. So a lot of people, when they saw this, they saw, let me zoom in on it. Some experience from the market about how these things tend to go on a daily basis, right? This isn't technical analysis per se. It's just, well, I guess it is technical analysis, but this is, we're not trying to predict the future with it. We're just showing what happened in the past. It's called Epic Pen. It's like $5. I love it. It's great. Okay. So you had this big down move and you had an initial down, right? And there was very, very wide volatility days. Look at the size of these bars, man. Look at the size of these bars, right? Okay. And then it chills out. So there's lots of people, it comes down, it makes a higher high. There's lots of people here on this bull run that are like, yay, it's going to go and we're going to be at all-time highs just like tomorrow. And, yeah, it didn't happen like that, right? This basically continued all through the fall, right? And then it wasn't until much later that they were finally able to, at the end of the year, the beginning of the next year, then they were able to develop this low volatility, everything just goes up thing again. That was the 2012. So that was the Euro crisis, right? I think 2012 was the Euro crisis. 2011, right? And then I think the next one that you want to point out that would be the biggest would be 2015, right? Yeah, 2015 here. No, that's 14. Here we go. 2015. Okay. 2015 was more of an economic slowdown, but here you get this same sort of a thing. It's like there's this initial bottom at the beginning, and then what? It goes sideways for, Also notice the time of year that it happens, right? It's happening like August to September. That's why I'm like a little concerned about it being like this. There was one. What was the one where it was like, I want to say that it was in the 2011 time period. There was one. No. It was since we've been trading. So it was maybe after 2016. There's 2016. Maybe it was the 2018 one. No. Guess I don't recall. Oh no, it was this one right here. It was 2019. right? You still kind of get this thing where it's like, okay, down initial bottom recovery, but it doesn't really turn back down again until after October, right? This one basically started in May. This one went all summer, but it's more just like August to October. Seems to be like the seasonal down period for stocks. So now we come back to this. Man. Okay. It's kind of, this is different, isn't it? It's kind of more of a slow and steady down move. It's still really strong bars, but like very consistent. There was some high volatility days here, but like they just went lower, right? So are we at like the best spot? I don't know. I don't know where that turns out because this is a little bit different of a pattern, but I would still expect to see something that's like a big low, a big rally, chop. Maybe in November it pulls itself out, right? Because I don't think that the bearishness will continue all the way till October, but it probably, if we're going to get to like a new all-time highs, it's probably going to be sometime after October of this year, right? And it might not be until like long after that. It might be years, actually. It could go sideways for a long time, but that's kind of the way things go. Okay, well, they did get a little bit more movement. I really could have justified staying in that and getting another $20. I think we're okay. It was a good trade nonetheless. Good day for us. Yep, I'm quite happy with it. So I got to get going. I'm sure tomorrow will be an interesting day given what's happened here today. So I will see you guys then. In the meantime, stay profitable, friends.